Hey, how's it going, everyone? My name is Amos, and welcome back to the Dividend Compounders Show. So when I was doing my homework for AMD, I stumbled upon the fact that TSM, a company that is based in Taiwan, is essentially running a monopoly in producing AI chips for all the big boys, such as NVIDIA, AMD, and others. So about 60% of the world's semiconductor chips are made in Taiwan. This is where Intel and I are saying eye to eye, because it's basically game over for Intel in terms of their CPU and GPU chips, since AMD and NVIDIA is not letting them catch up. However, Intel's rebound and turnaround story is becoming a foundry business that manufactures chips physically in the US, so that we don't have to rely on TSM as much as we do right now. Intel sees an opportunity, and so do I. And funny enough, Intel used to be a favorite among the dividend community for their high dividend payout and low stock price. But before we get ahead of ourselves and label Intel as an opportunity, let's take a deeper look at this company to see if it's undervalued or if it's as disgusting as a person who honks nonstop in bumper-to-bumper traffic. They're the worst type of people. But let's go ahead and figure that out in this video. And first things first, we're going to go ahead and talk about Intel's business model and how they make revenue. So Intel, for the most part, is in the business of designing chips for data centers, your dingy little Chromebook that you use to watch Netflix, and Intel even manufactures chips at one of their own factories. So Intel is trying to become a do-it-all company when it comes to chips. And similar to IBM, another antique tech company, Intel strategically acquires smaller companies to maintain a competitive and innovative portfolio. And what's interesting is that they even have a company known as Mobileye in their portfolio. Mobileye is one of the most advanced autonomous vehicle tech companies that are around the world right now. Think of it as the rival to Google's Waymo or Tesla's own technology. And the cool thing about Mobileye is that when their technology goes to market and is readily available all across the world, just imagine the hype that's going to potentially surround Intel. No one associates Intel with this type of technology, and I didn't even know until I started doing my homework and deep dive into this company. And oddly enough, they don't really talk about Mobileye too much in their earnings calls, which I feel like that's a missed opportunity in my opinion. But circling back to their bread and butter, the CPU chips side of the business, also known as their nipples and testicles, up until 2020, they had an exclusive relationship with Apple where Intel made CPUs for all of the MacBooks. However, Apple has cut that partnership and now they supply and design their own M-series chips. And as someone who uses a MacBook to edit these videos, I'm going to tell you it is so freaking good. But anyways, when Apple decided to cut Intel out of the picture, it was a huge and a devastating blow to Intel's revenue and loss of a customer. To lose Apple as a customer is huge for any business or any company out there. But in the grand scheme of things, it didn't really matter because even in 2020, Intel was still the front runner and most popular CPU chips company, which is a statistic that they still hold to this day. So when we think about Intel and their CPUs, they pretty much supply every single laptop for Dell, HP, and Microsoft. So even though everyone, including their wife's boyfriend, likes to make fun of Intel, they're still the market leader when it comes to laptop CPUs. So as it stands right now, Intel's business model is selling and making chips. And then of course, the business segment that they keep under wraps and quiet and private is the self-driving car research that they're going to unveil eventually. So now that we all understand what Intel is all about, what is the bull case for this company? Well, between you and me, Intel gives me Boeing vibes. Yes, you know that plane company, the one that's always in the news for the wrong reasons. If you know anything about Boeing, then you know that it's an American company in the business of aerospace and defense. Not just those planes. But, this is a huge but, the US government refuses to let Boeing fail. So am I short with small nipples to think that the US government is going to pump money into Intel so that the US will not fall behind in technology in terms of chips and manufacturing? Because if Intel falls, there's no real other American company that's willing to take on TSM. And let me tell you this, with the incoming presidential cabinet, their whole motto is to make America great again. All that to say, they're not about to let Taiwan be best in class and be a monopoly, especially when China looks at Taiwan like it's a snack. As such, I think the US is going to pump Intel until they've got a legitimate pony in the race against Taiwan and TSM. And even though Taiwan is a close ally to the US, it's a geopolitical thing. With Taiwan's proximity and location to China, there's so much risk involved if anything goes wrong. The supply chain shortage is going to be catastrophic to US companies. All it takes is for one drunk sailor to launch a torpedo or an angry officer that has ego issues to push a button to start a massive war in the Pacific. Anything can go wrong. So the first point is that the US government has Intel's back. And number two is that the CEO of Intel was let go very recently. And it sounds like bad news because right now they're directionless and leaderless. However, that also means that someone else is going to be coming in to fill those size 8 in men's shoes. Sometimes a new leader is all it takes to freshen things up and to shake things up. The point that I'm trying to make is that when Pat Gelsinger was let go, the stock pumped. So I think depending on his replacement and the announcement, the stock can easily pump again and then stay at a flat level, just like Starbucks did when the Chipotle CEO transitioned into Starbucks. And point number three, as of right now, Intel is operating with desperation in their hearts. You can smell it and you can see it. They're cutting costs where they can with layoffs, shutting down unprofitable segments of the business, and they're even doing sell to lease to divest as much overhead costs as possible. As such, their balance sheet that we're going to be looking at here in a second, their balance sheet should be improving in the next 2 to 3 years. Although I'm going to say this, their debt situation with building out the chips factories, it's only going to make their CapEx and leverage worse until they reach the scale and profitability of TSM. So that is something to be mindful of. And the next reason is why most of you are watching this video right now. Intel is promising a turnaround story to Wall Street and other investors. And if that happens, this stock could easily rebound back up to like $30 a share. And despite their current reality of being beaten down and just being ugly, Wall Street could pump Intel because they believe it to be undervalued with the promises of the foundry and manufacturing pivot of their future. And here's the thing, while they make that transition, as it stands, Intel holds the PC CPU market share, although it's important to note that their market share has been declining year after year in favor of AMD. AMD is gaining what Intel is losing, but regardless, that's still a sizable chunk of the industry, and it's gonna buy Intel some time to perfect their craft in manufacturing chips, because right now ain't nobody trusting Intel. All that to say, in the meantime, Intel is going to sit back and collect a fat check for their slow CPU chips that they have with their partners as they practice their craft. And I say slow because in terms of specs and features, the Apple M series chips way better. And when it comes to AMD, I would say they are pound for pound the best fighter in the world, the John Jones of the CPU world. Intel pales in comparison. I would argue that Intel is unfortunately the old guy in the gym who thinks he can still fight, but dude, he's one deadlift away from throwing out his back. He's old, he doesn't have what it takes anymore to keep up. And despite all of that, Intel is currently producing and manufacturing chips in their foundry division. As we segue into 2025, Intel pretty much makes all of their own in-house chips for AI data centers, GPUs, and CPUs. They're making their own chips, which is pretty cool to say the least. And maybe you didn't hear me the first time, so they're gonna go through a trial and error process in learning how to perfect their craft so that they can gain the trust of TSM customers, the big dogs, the NVIDIAs, the Googles, and the Amazons of the world. And not only that, but they are also making chips for the US military for their contractors and the various vendors. The US government is not having TSM make chips for our sensitive equipment. However, when it comes to Apple, Google, or NVIDIA, they still take their business to TSM. But what I'm trying to say, because this is the bull case for Intel, in the future, that could potentially change. And if that changes, that's going to be absolutely huge for Intel. But a shower thought that I had is, even if that happens, their revenue could potentially stay flat, because as they lose revenue from losing the CPU side of the business, they're going to make up for it from manufacturing chips in their foundry, which is what everyone learned the hard way with Disney. As they lost cable-paying customers, they gained streaming customers, and as such, their revenue stayed pretty much flat in their entertainment segment of the business. And so if Intel wants to execute this perfectly, they need to gain more CPU market share and become the TSM of the United States. If they can do both of that, dude, this company is going to rebound like no other. But anyways, the only reason why Intel stock isn't $3 a share is because there's optimism behind Intel right now. The market is hoping that Intel is going to have a spinoff like 3M or J&J did very recently. And when a spinoff happens, a company splits up into two separate stocks. Usually you invest into one over the other because it's more nimble, more profitable, or it's just growing fast. And in lieu, you avoid the other one because it's older and is an outdated model of the former company. So in the case of Intel, I think what's happening is people want to invest into the foundry, but they don't necessarily want to invest into the chip design side of the operations, because I think even if you don't really know too much about chips, everyone knows that AMD is running laps around Intel. So with that said, those are all the bull arguments for Intel. Now let's go ahead and take a look at some numbers, finances, and business fundamentals. Alright, so at the time of recording this video, Intel is currently trading for about $19.50 a share. When we zoom out and look at their year to date, they are down by negative 61%. That is pretty atrocious. In the beginning of the year, they were trading roughly for about $47 a share. If you bought into Intel in the beginning of last year, dude, I feel really bad for you if you are currently bag holding. Their current PE ratio is an NA, not available. Reason being is that their earnings per share and net income is negative. However, their forward PE ratio is a 27. You tell me, do you feel like Intel is cheap at a 27 PE? When we take a look at their income statement, the line item that I'm interested in is their revenue. This is what investors call the top line. They peaked in 2021 while making $79 billion. That's pretty impressive, I'm not gonna lie. But then the following year, their revenue decreased by negative 20%, and then the following year after that, it went down by negative 14%, and it seems like they have stabilized at around the $54 billion mark, which color me shocked when I found out that Intel, this company that everyone paints to be trash and is utterly useless, to be making $54 billion. I did not see that coming. So to see this type of revenue from Intel shows me that this company does have a place in business and they seem to be doing something right, even though everything seems to be against them and they're shooting themselves in the foot. And what is absolutely wild to me is when we scroll down and take a look at their net income, this is what investors refer to as the bottom line. Up until 2021, their net income used to be beautiful. Back in 2019, they generated $21 billion. However, if you fast forward throughout the years, it's just been declining year after year. And for the trailing 12 months, we're looking at negative $15 billion. And that's because of the CapEx that they're pumping into in building out their foundry and the manufacturing factories. So it's not looking too good for them right now because they are building out some assets. And then as we look at Intel's balance sheet, what I care the most about is their cash situation in comparison to the debt. And believe it or not, for the trailing 12 months, they have about $24 billion of cash and cash equivalents on hand, which is kind of a lot. I'm surprised. But as we scroll down and take a look at their debt situation, the total debt that they have right now is $50 billion. That just makes the hair that is sitting on the top of my head just fall out to hear $50 billion of debt. Because when we look at their net cash to debt, negative $25 billion. That means Intel has $25 billion of debt more so than cash on hand. So if they were to run into any kind of issues or obstacles or setbacks, this type of cash to debt ratio is enough to make this company crumble. I'm not kidding. And when we take a look at their cash flow statement, I'm only really concerned with the free cash flow because it tells us how good is this company at making money, but also are they profitable. And when we look at their free cash flow from fiscal year 2022 onwards, it is ugly. Currently, it is negative $15 billion of free cash flow. This is atrocious. So their balance sheet, income statement, and cash flow statement are all ugly, hideous, absolutely terrible. And as we look at Intel's adjusted stock price total return, because hey, performance matters, year to date, negative 60%, as we just established. If we zoom out to 3 years, then it's negative 57%. And what that means is, had you invested into Intel back on December 20th of 2021, your money would have gone down by negative 57%, if that makes sense. And then for 5 years, negative 62%, 10 years, negative 31%, Dude, this is terrible. We're just going to have to stop it right here. If you had invested into Intel back in 2014 in December, you would have been in the red by negative 31%. So this is a company that is just not good in terms of performance. But before we move on, let's give them the benefit of the doubt and see their performance for the past 20 years. Finally, had you invested into Intel at $13 a share back in 2005, then your total return would have been 43%. Can I get a yay? Yay, Intel. Wow, 20 years to give me 43%. So generous. And the last fundamental that I'm going to be looking at is their net profit margin to figure out, is the company generating profit through their operations? The gross margin as of right now is sitting at 34%, which is not too bad. The operating margin, negative 17%. Their net margin, negative 29%. This is really ugly. That means the company, as of right now, is currently unprofitable and they're losing money to carry out their operations and to build out their chips. They're basically operating as if they are a startup. To be this old of a company in the tech world and to be unprofitable is just, it feels like a curse. And to be honest with you, I'm not gonna lie to you guys. I analyze a ton of companies, and I would argue in the past 90 days, Intel is probably the worst finances, numbers, and fundamentals that I have seen in a company. By far the worst. They take first place in being the worst. And that's why some people are arguing, how much worse can things get for Intel right now? And I see where they're coming from because it's pretty atrocious as things are. You would think that by just looking at their numbers, it paints the picture and the argument against Intel. However, I do want to share my thoughts of what I think are the aspects that are going against Intel. But before we get into the arguments against Intel, it's like when we were younger, we all had that one buddy, right? The one that got his first girlfriend and then he spent more time with her instead of with the boys. And I don't blame him because when you're in love, you turn a blind eye to everything else and to that person's red flags. But as an outsider looking in and as their friend, we were able to see their lady friend for who they really were, full of concerns, questions, and they even had an ugly heart. Everyone but your friend could see it, and sadly sometimes we just have to learn the hard way by getting our heart absolutely crushed. But anyways, I tell that story because I don't want to offend any Intel investors, but that's what Intel reminds me of. It is a walking red flag. And I say that because it doesn't matter which brokerage you use, whether it's Charles Schwab or Vanguard, Intel should come with a warning label because there's a lot not to like here and a lot to unpack. If the financials did not scare you away, then perhaps the most compelling argument for why you or your wife's boyfriend should avoid Intel is their leadership, or lack thereof. All the way from the board of directors to the executive leadership team, I would label as no bueno. And as a follower of Warren Buffett, we do have to assess and take into consideration the management and the people that are running the day-to-day operations. And when it comes to Intel's, I don't really get a good feeling. To be a good leader, you need to have a strategy and a game plan that helps your company to dominate against the competition. And when it comes to Intel, they just operated on this mindset of playing so safe because they had a winning recipe with their CPU chips that they just fumbled it all. They fumbled the bag. Instead of being innovative, now they're in this position of having their backs up against the wall and they're just reacting and trying to do whatever it takes to stay alive. Whereas when they were in best in class for CPU chips, in that position, they should have been going balls deep into R&D and pushing the envelope towards AI and all of that, but they just weren't. This was a company that was just playing it too safe. And whenever a company plays it too safe, especially in the tech world, when things are always adapting and evolving and changing, usually the results are not too good. All that to say, Intel is missing good leadership. Because to be a good leader in charge of Intel, you gotta take long-term calculated risks. And when I think about the great giants in today's stock market, every single one of them took a huge risk in investing into the future, such as Walmart and building out their logistics network in the 1980s. Everyone on Wall Street and investors were so fearful, very angry, and saying, why are you wasting your money towards building out distribution centers and a trucking network. Why are you doing that? Your supply chain doesn't need that. And fast forward 20, 30 years, that's the reason why Walmart is the best retailer, physical retailer in the world. And some other examples include Amazon and AWS, or even Nvidia in their CUDA framework. What I'm trying to say is that Intel's proposed pivot with the foundry makes absolute sense to me. I think that's the right thing they need to do. However, they need someone who can guide the school bus in that direction and to get it done and to execute. Now, let me tell you, a high-quality tech CEO is so hard to come by, especially in today's market. And who knows if Intel has any up-and-coming leaders internally that they can promote. I highly doubt it, because I feel like a bright leader with a ton of potential would be very frustrated at how things are ran at Intel, and they probably jumped ship 2, 3, 5, or even 10 years ago, and they're thriving at Microsoft, Google, IBM, or any other company. So unfortunately, when it comes to headhunting for a CEO, I don't think Intel has someone in their ranks to take that role. They need to pick someone that is going to bring fresh ideas. But then again, even if they do find the right CEO to save Intel, turning a company around is an enormous challenge that demands a ton of small decisions to be made consistently every day over months or even years to achieve the right results. It's not going to happen overnight, especially over 1 or 2 quarters. It's going to take a while. Case in point, if you have ever managed a team before in a business setting, then you know exactly how difficult it is to align everyone towards a common goal or a KPI. You need to get buy-in from the members so that your game plan can be executed to the T. And while it seems pretty straightforward, I'm telling you, dude, if you've never been a leader of people, it's so much more difficult than you think. And for Intel to change for the better, I just don't know if it's possible. So even if a different leader ends up guiding the Intel ship and he's an innovative, visionary person, the company DNA and culture might be too far gone. The people that are just so used to doing it the Intel way might not buy in to the new CEO. And from my understanding of the tech world, Intel has so much red tape in order to operate efficiently and properly. So if they really want to turn things around and rebound, not only do they need a visionary leader to be the CEO, they also need to change the process of their business to make it more nimble and fast-paced. And last but not least, I think the scariest concern is that, as it stands right now, Intel has absolutely no moat in any of their products and offerings. As a matter of fact, I would argue they're falling behind in every single category. Now, if they can gain the trust of tech giants and their foundry business can rival that of TSM, then, of course, Intel could very well be the most underrated and undervalued company in the stock market. However, that's a big if, and in their current situation, it's hard to see that come to light. So what are my thoughts and opinions of the company? Well, in terms of a price target, it's truly hard to evaluate a company and come up with an intrinsic valuation when they pay no dividend, have a negative EPS, negative free cash flow, negative net income. That being said, I don't even know what Intel is worth. But what I do know is that even at $20 a share as they are right now, or even $19.50, to me it feels a bit expensive. Because the fact is, it's a company that is declining in every metric, and it still has a forward PE of 28, and I think that's too much. I think if their PE was more reasonable, like a 10, or 12 for what they are right now, a dumpster fire of a company, that would be more fair. But to have a 28, the exact same forward multiple as AMD, I just don't agree with that. And even besides AMD, there's so many other companies in the stock market right now that are operating on a single trading multiple that have a brighter future and solid fundamentals, and their metrics are growing year after year. And if they have a trading multiple of a 5, that just makes me feel like Intel is overvalued. And as you can see on your screen right now, when it comes to Wall Street analysts, they think that the average price target for Intel should be $30 a share. And even the most bearish analyst that is following Intel, he thinks the price target should be $20 a share. So unlike me, these guys think that Intel is undervalued. They think it's worth $21, $28, $23 a share. And these analysts have 4 or 5 star ratings. My whole thing is, if I'm betting big on US semiconductor chip manufacturing, then why not Texas Instrument, who is also trying to do the exact same thing that Intel is trying to do with their foundry? Or why not just invest into TSM? TSM, as of right now, they're building out factories in the US so that they can take care of their clients domestically and not have to produce it overseas and then to ship it back in and then be hit with tariffs. So TSM or Texas Instrument. And on that note of manufacturing factories, Intel currently has 15 wafer fabs, and they have 3 factories that are based in the US. So it does seem like Intel is ahead of the race in one category. But the thing is, can they do it better than TSM and Texas Instruments? That's the bigger question. Then again, between you and me, I think Intel has a fascinating proposition. Right now, they're designing the blueprint for their own AI chips, and then they're taking that exact playbook into their foundry to produce it. Which means, I think you see where I'm trying to get at, they're getting a lot of practice and repetition in making advanced chips. This means if Intel messes up, it's okay because it's their own chip and they can just get rid of that batch and see what went wrong and try to troubleshoot so that it doesn't happen in the future. And as a guy who used to work in operations, I would rather see Intel make mistakes while making their own chips than say Nvidia's chips. Because if they mess up Nvidia's order, Nvidia's just going to take their business to TSM because they're going to be like, dude, TSM never gets it wrong. How are you so bad? So as Intel gets more time under their belt, they'll be able to gain the trust of the US tech giants, and it helps that they're located right next to each other. However, the thing is, as they gain that time, they'll be burning through cash and piling on the debt to stay afloat, as we just saw by looking at their balance sheet and their fundamentals. It looks terrible, atrocious. But here's my thing. I would change my opinion on Intel if they were to acquire a CEO that has a ton of experience in semiconductor manufacturing from, like, I don't know, Lam Research, Samsung, or even Applied Materials or TSM. A visionary leader, someone that has a ton of potential. Or I could also change my opinion if we see Nancy Pelosi or other politicians and Intel executives buying up Intel shares. If they do that, then I would think to myself, they know something that I don't, and I would probably copy them and jump in as well, depending on the price. I don't have a price target. However, just for fun, if it gets down to like $15 a share, I literally might just buy one for the fun of it. Just for the fun of it, just for the YouTube channel. But between you and my dog, by the way, it's his birthday today, he just turned 5 years old, I truly hope that I forget about that, so that way I don't have to buy one share of Intel, even when it hits $15 a share, because I would rather spend that $15 to buy another company's stock. And the thing is, I ask myself, right, would I want to be a part owner of Intel, even as it reaches these ridiculously low prices? Intel is basically the same price that they were back in 1997, and some people would argue, dude, it's really cheap. My answer to that is, no, I would not. I would not want to be an owner of Intel until they show some promising changes for their future. They currently have negative net income. For me, that's a huge turnoff because it shows me that the company is unprofitable and there's no signs that they're going to be profitable in the near future. Could they be in the next 5 years or 10 years? Maybe. But for the next year or two, buying into this stock and holding on to it is just going to be painful for me. To see it be in the red or to even trade flat and to pay no dividend, which means they're not going to pay rent to be in my portfolio, to be trading flat and to be in the red. Too many signs for me to just not want to buy it. And besides, there's other opportunities in the market. For instance, just this past week, I picked up shares of PepsiCo, AMD, FMC, and Adobe. And as the market is going through this tiny sell-off and rebound, I would buy any one of those 4 stocks again over Intel. And as a long-term investor, I just don't like the idea of gambling on a turnaround story that may or may not have a good ending. Anyways, I feel like I'm rambling now, so let me know what you think. Do you like Intel? What am I missing about Intel? Help me to see the light on this one because I'm just not seeing it. I know there's potential in their rebound and in their turnaround story and to have a monopoly as a chips manufacturer that's based in the US as an American company. I get all of that, but I just don't believe in it. So if you are bullish on Intel or if you are an investor of Intel, let me know what your investing thesis is because I could change my mind. I'm a human. I'm not set in my ways. Anyways, I love you guys. Stay safe and I'll talk to you really soon. Have a good weekend. Have a good day or have a good night. Peace.